Loss return. Now let us understand why Act wants your loss return to be filed in time. Oh, that is consequence if you don't file it. But why Act wants file it in time? If I gave you 10 minutes break is okay, but when I increase the break time, you will play the mischief. If time is given more, the mind gets diverted. So if loss return is not filed in time, you will unnecessarily keep increasing your losses by booking bogus expenses or not. Are you getting my point? Let us say I am having a loss return of 3,50,000. Yes, one of my friend wants the bogus entry of salary paid 2,50,000. I said fine, I will give it. Anyway, 192 will not attract because it is 2,50,000. So what I have done, payable I have shown. Cash is not there in my balance sheet at current asset. Cash balance is not there. What I have done, salary payable and debited to P&L 250. Now my loss became 6 lakhs. And next year I have a huge income of 20 lakhs. What I have done, I have set off it. So when you get more time, you play more mischief or not? Are you getting my point? Yes. So here that logic, the Act says the section 80 has insisted that loss return should be filed within due date of 139(1). Now here in this case, loss return, is it compulsory to file the loss return? First tell me that. No. Only for company and firm case you can say, or the proviso for what we have discussed right now. There the loss return is compulsory. But other cases, is it compulsory? I am saying no. But for your benefit, you will file it in time or not? Are you getting my point? Why? If you don't file it, you cannot carry forward it. From SSC point of view, for his benefit, he will file in time. Department is not saying compulsorily file it. What will happen if you don't file it? You will lapse with what? The set off of the losses. Are you reading it? Yes. So loss return filing is not compulsory, other than the category what we have seen, company, firm, and the ROR covered under the proviso 4. Others, if you want to file, file it. Otherwise, don't file it. ATI, IBIC, if you will not file, you will not get the deduction. So loss return is not compulsory. It is for your benefit. You have to file it. And what does loss return? It should be filed. Section 80 was brought to make this loss return to file in time. What section 80 says? Losses can be carried forward. Only losses can be carried forward under chapter 6 only if ROI is filed within due date. And which due date? Under section 139(1). Within that time, if you file it, then only. Which losses? Let us understand. There is a loss of 71B house property. Now don't write it something, I have to make changes. 72 is for what? PGBP. 73 is for speculation. 74 capital loss. 74A maintaining resources business. Yes, fine. Then in this case, these are covered under the provision of section 80. These are covered under the provision of section 80. Anyone will tell me what is this section? Specified business under 35 AD. Is it correct? Fine. Now, why 71B is not covered? What is the reason? 71B losses are not covered. Means I can carry forward the losses of HP even if return is filed late, or even if return is not filed. Yes. Why it is there? Because when 80 came, 71B was not there. Fine. And even though it came later, Act didn't made any amendment for including this 71B. Why? Because HP losses are only due to two expenses. Can you tell me which are the two deduction because of which HP losses are there? One is municipal taxes, which is paid to local authority. Can you play the mischief? Another is what? Interest under section 24 clause B. Can you play the mischief here? So this losses cannot be played mischief, cannot be inflated. So Act has not taken the cognizance for what's 71B. 35 AD has came right now only. Is it correct? Fine. Come to the other part. What about section 32? What is it? Section 32? Depreciation, everyone knows. Scientific research. 36 subsection 1 clause 9. What is it? Promoting family planning, capital expenditure incurred. Yes. These are still allowed even if return is filed late. Why? Because they are not covered in chapter 6. Chapter 6 is what? Losses. Carry forward of losses. This is covered under the chapter of PGBP itself. Unabsorbed depreciation, unabsorbed capital expenditure incurred for scientific research, and unabsorbed family planning expenses of capital nature. Yes. So even if return is filed late, HP loss, 35 AD loss, and this losses, can we carry forward? Yes. Section 80 will hammer which losses? PGBP, speculation, capital loss, maintaining resources. Are you getting my point? No. My question is here, suppose AO has asked me to file the return under this notice. Fine. He gave me the time of 20 days or 30 days, whatever is the time. Let us say 30 days he has given the time. I have filed within notice period. Fine. And second possibility, after the notice period, for whatever may be the reason. Fine. Now my question is, can I carry forward loss in first case? Think over it and tell me. AO issued me the notice under 142.2, 142.1 subclause 1, asking me to file the return. Fine. And he gave me the time limit of 30 days. I have filed the return within the notice period. Fine. Can I carry forward the losses or not? Yes or no? Why? I told you this provision have the relevance, so we are discussing it. Why I can't carry forward? 142 notice can be issued only after the time limit of 139.1 goes. Are you reading it? And what does this section 80 is saying right now to you? 80 is saying that if it is filed within time limit of only 139.1, it is saying. It is not saying oblique 142. That is allowed in revised return, but not here. Are you getting it? So in both the cases, it will not be allowed. Are you getting my point? Connecting provision, here only we'll discuss revised return. Loss cannot be carry forward is okay. But revising the return is different concept. Here it will be allowed. Here it will not be allowed. Are you getting my point? Got the difference? Yes. This again you will get the difference once we will discuss revise return provision. Yes. Now you can write down. I will scroll down slowly so that you can write it. Done with? Below that, one important point. Current year losses shall be eligible to set off. Current year losses shall be eligible to set off even if even if ROI is late, that is provision of section 80 is applicable only for carry forward. Now my question is, suppose our previous year is 15-16, fine. Earlier year there was a previous year 14-15, there was a brought forward of losses 20 lakhs, fine. This year also 15-16 there is a loss. Current year also there is a loss of 8 lakhs, fine. Now unfortunately the ROI was late. ROI is late, fine. My question is, what about this 20 lakhs? Can I carry forward this at least? Yes. This is brought forward means this year you have filed the return in time. Do you agree or not? So there is no restriction with the brought forward losses to carry forward. Are you reading it? So this restriction in brief to say is applicable for current year losses to be carry forward. Are you reading my point? Yes. So below that only you can write down one point. Provision of section 80 is not applicable for provision of section 80 is not applicable for brought forward losses. Can I revise my return? For what purpose? Let us say I file the return of income 4 lakh rupees and my banker says no, loan cannot be fitted, make your income 5 lakhs. So I have revised the return to 5 lakhs. Can I do that way? Then when can you file it? When you find any error or omission or any mistake, that time only you can revise the return. Are you getting my point? Yes, fine. Simple example, I forgot to take the chapter 6A deduction. Can I revise it? Very well. I forgot to offer one house property rental income, or I forgot to claim the interest. I skipped out the interest paid for housing loan. Can I revise the return? Yes. But revised return, there is one prime condition. What is it? We agree that you made the mistake, but did you file your original return in time? Are you getting it? So return can be revised. Return can be revised if original return is within what? Within time limit specified under 2 section. It is specified under section 139(1) oblique 142(1). Right now only we have discussed, na? Can be revised. Is it correct or not? Yes. So return can be revised if original return is within time limit specified under 139(1) oblique 142 subsection 1. If SSC finds what? Any error or omission in the original return. Is it correct? Fine. Now my question is, what is time limit? Don't write it, I will give you time to write. What is the time limit? Based on your original return, if already the assessment is completed, will we give you chance to again revise it? No. So first is within 1 year. That 1 year from what? From relevant assessment year, end of the relevant assessment year. Yes, or we will rectify it within end of the relevant assessment year. 1 year from end of the relevant assessment year, or completion of assessment. Now tell me, assessment may be which? Which assessment is possible? Here 143.3 is also possible and 144 is also possible. Why? 144 is how it is possible. You have filed the return. When case was selected for scrutiny, you are not cooperating with the assessing officer. He will do best judgment. So both the assessment are possible here. Fine. Now, here in this case, my question is 143.1. Everyone is aware. Those who are doing articleship, everyone is aware. What is 143.1? Don't tell me not aware. Intimation. 100% all returns get processed. Is it correct or not? 100% all returns get processed and you receive what? Intimation. Is it correct? Fine. Now, intimation is of processing of return. This we'll discuss in detail when we'll reach to 143.1. Briefly, I am discussing to understand. Processing of return. Fine. Here, no one is doing your assessment. No. Only computer will do what? It is a set software is there. It will check chapter 6A deduction is claimed correctly. Rate is calculated. TDS interest under 234 BC. That will be calculated and intimation will be done. Here, no human being is involved. Fine. Is it an order? Is it an assessment? No. Now my question is, I filed the original return and I received the intimation. Fine. Now I received the intimation and I came to know that wrongly I have not claimed the interest under section 234B. What shall I do? Shall I revise my return and go for refund, or shall I go for rectification? Time limit is there. You can revise your return. I am giving you choice. You have two options. Yes, return is filed, intimation is received. Intimation is not assessment order. Means I am still holding my right to revise the return. Yes. Now I have two choice. Revise the return or apply for rectification. What should I prefer? But obvious, revising the return. Are you getting my point? Because the moment you will file the return, it will go to system. It will immediately get processed and refund will be generated. Are you getting it? So when there is both the possibilities are there, when both the things remedy is there, it is always preferred to revise the return. Are you getting it? Why? EO might be busy. He will not able to give the rectification that promptly, but this computer system will do it promptly or not. Yes. So 143.1 is not a assessment order. It is a intimation. So can I revise the return even after receiving the intimation? Yes, I can do that. Fine. Now my next question. Suppose my original return was in time and there was a income. I offered 2 lakh. Fine. In my revised return, my question is, I have booked the loss of 1,30,000 under PGBP. Fine. Can I carry forward it or not? Original return was in time. There was an income of 2 lakh rupees. But revised return, there is a loss. My question is, I can file the return. That is true. Can I carry forward this loss or not? Will section 80 will pull me or not? Because revised return is not within the time of 131. Now my question is, can I get the benefit of carry forward of loss or not? Yes or no? From law interpretation it is no. But based on the Supreme Court judgment in Dhampur Sugar Mills Limited, the judgment was what? Revised return step into the shoe of original return. Means whatever provisions are applicable for original return, that will be applicable for revised return. Are you getting my point? Yes. So original return will replaced by revised return and I can carry forward this loss. Or let us say original return there was a loss of 2 lakhs and revised return there is a loss of 430. Can I carry forward? Yes. Even if original return there was a profit and revised return there is a loss, definitely I can carry forward. Are you getting my point? Fine. Only one thing cannot happen. If you have filed the return under 142(1) within time, within what? Notice time, and you have revised it, revision is allowed. But here can I apply Dhampur Sugar Mills case law? No. Here loss cannot be carry forward. Are you getting two different cases I am discussing? Yes. One, original return filed within the time limit of this. Another is 142(1) this time. I filed it within time. Fine. So can I revise it? Yes. But can I carry forward? Here yes, but here no. Why? Because this is applicable only after the due date is gone. Are you reading it? Yes. Let us write down. Add one word, within 1 year. Otherwise you will say from 1 year. So it will be later on. Within 1 year from end of the relevant assessment year. Below that, just write down. Dhampur Sugar Mills Limited The judgment is of Allahabad High Court. Revised return replaces the original return. Revised return replaces the original return. Accordingly, loss declared in revised return shall be eligible to carry forward. Shall be eligible to carry forward. However, revised return under 142(1) subclause 1 is not eligible to carry forward the loss. Next, one more case law. Kumar Jagdish Chandra Sinha. Belated return cannot be revised. Belated return cannot be revised. Fine. Let us fastly revise. Central Board of Direct Taxes, the immediate authority, yes, is what? Chief Commissioner of Income Tax, also known as Principal Chief Commissioner of Income Tax. Now, parallel body here, yes, for Chief Commissioner there is also called Director General, and wherever the word is Commissioner, replace it by Director. Are you getting it? This authority are not doing assessment. They are looking towards law compliance. Where there is a loopholes, administration part is done. So CCIT, you can say here Director General. CIT, you can say here Director. Joint Commissioner, Joint Director. Are you getting it? Yes? Fine. So CBDT, CCIT, below that is CIT, and AO is at 3 levels. JC, that is Joint Commissioner, also known as Additional Commissioner. ACDC, that is Assistant Commissioner or Deputy Commissioner, and ITO. This authority comes with the IRS exam, UPSC exam, they pass, then only they come, and they are promoted further to JC. Are you getting it? Yes, fine. What is the role of CIT? CIT will supervise the lower authority. Then he will grant approval for what? Charitable trust and religious trust under 12A and AA. Waiver of interest under 220. When SSC is in default, he is liable to pay interest under 220, 1% per month. So that who can waive? CIT. Waiver of penalty under 273A. Once in life SSC can become honest, that penalty can be waived by the CIT. Revision of order. Which type of orders can be revised? 263, it is for revenue. For revenue means what? Here CIT will increase the assessment. And 264 is for SSC. Here he can keep same income or he can increase the income. Are getting, sorry, can reduce the income. Yes. Under 264, CIT cannot increase the assessment. Now then, what is the remedy to CIT? He will complete that order first. Are you getting my point? And then he will go for 147. 147 is what? Income escaping the assessment. I told you Brahmand with the department. Yes. Here he will do nothing. He calmly and quietly will complete your order. And then he will open the case again under what? 147. Done. Here in this case, first we want you to file the return, then we will do the assessment, and if there is any concealment, then we'll go for penalty and prosecution. Is it correct? Fine. 4 types of assessments are there. Regular assessment, this can be done only if return is filed. Best judgment is the assessment which is for non-cooperation of SSC. How come non-cooperation? You were required to file the return. You didn't file it. We'll do best judgment. You filed it, but later on we have given you notice. You have not complied with that. We have given you direction to get your accounts audited, but you have not done it. So what we will do? We will go for best judgment. 147. It is what? Assessment / reassessment / recomputation of, for what? For income escaping the assessment. Yes, concealment of income also you can say, but concealment is a narrow term. Now, income escaping the assessment is a broader term. How come? I will tell you. Now just check. I have concealed the income. I have concealed the income means what I have done? I have concealed the facts. This is what escaped the assessment, and some will be due to change in law. For example, Supreme Court has given the judgment that this expense is not allowed as a deduction. This becomes a law of land. It is an interpretation of the law which will be applicable from the date when that law came, that provision came in force. So that left escaped, that income got escaped, na? But did I hide it? No. But due to change in law, that has got escaped. So that is covered here or not? Are you getting my point? So escapement is a broader term which include not only concealment but other than concealment also. So 147 covers all the cases of what? Income escaping, which by default includes concealment and non-concealment. Yes. 153, search and seizure. Yes, when department comes at your home to wish you happy birthday in morning. Yes, for 6 assessment year. Remedy. What is the remedy against the order? You can go for rectification, but rectification there is one condition. There should be mistake apparent from record. You can't go for interpretation of law. Yes, fine. Appeal. Appeal within how many days? 30 days. First level CIT appeal. Next level ITAT. Next level High Court. Next level Supreme Court. But ITAT is the final fact finding authority. If the question is of law, High Court will accept it. Otherwise, High Court will dismiss your appeal. Yes, fine. If you are late, within 30 days you are not able to do it, CIT appeal is not ready to condone the delay, what I will do? I will go for revision under 264 within 1 year. Is it correct? Revision of 264 is final. Can I go further appeal? No. Then what is the remedy? Constitutional remedy, not in income tax. Writ petition is constitutional remedy. I will go for writ petition. Are you getting my point? Done. Every law have to follow natural justice. So whenever there is any hardship, opportunity of being heard is to be given. If it is not given, then what will happen? Yes, that action taken is not correct. Then order by AO is always speaking order. He will give you in detail what base was there to do the addition, what base was there for giving the deduction. Order is always speaking order. Yes, fine. 143.3 is possible only if return is filed, but 144 is possible even if return is not filed. 139.1 compulsory filing of return. To whom? Company it is compulsory. Firm compulsory. Defunct company. What do you mean by defunct company? defunct company, company under liquidation, are they liable? Yes. Fine. Now why the company it is made compulsory to file the return? If during the incorporation period 4 to 7 years it took, they have capitalized huge expenditure which may not be eligible for capitalization. If you don't file the return, can we examine that? So even if you have not yet incorporated, business has not been started, you have to file the return compulsory. Are you getting it? Fine. Certain person whose income exceeds the income not chargeable to tax means what? If your income exceeds basic exemption limit. Basic income definition here to be considered before chapter 6A deduction. Are you getting it? Means if my GTI income, in brief to say for third category what I should consider? Gross total income, in simple term to remember. Are you getting it? Yes, fine. Then chapter 6A there are deduction in 3 groups, A, B and C. A is for investment, B is for donations and C is for what? Specified income. So these deductions you can claim it, but what is the condition here? File the return within due date. I am not saying don't only file the return, but file it within due date. If you don't file within due date, you are not eligible for chapter 6A, this major deduction. Are you getting my point? Yes. Then 10A, 10B, that deduction also you will get only if you file the return in time. If you don't file the return within relevant assessment year, there is a penalty of 5,000. Is it correct? Fine. Come to the next. Due date for company SSE. Any SSE whose accounts are audited under any law time being in force, and working partner whose firm's accounts are getting audited 30th September. Residual category 31st of July. And SSE those who are covered under transfer pricing, which is international transactions. Yes, the time limit is 30th of November. Done. If you have filed the return within assessment year, no penalty. If tax liability is nil, no penalty. Otherwise penalty of 5,000. 271(5), this is general penalty. Specific penalty will check in next lecture for other defaults. Fine. This penalty is what? General. Proviso added by Finance Act 2015. In case of whom? Only ROR. Act has used the word. In case of any person who is resident but not ordinary resident, means who is included? ROR. Where he is having the asset held outside India. Fine. Or he is a beneficiary. Or he is having what? Right of signing any account outside India. Then he requires to file the return even if what? Income is below basic exemption limit. What are the consequences of late filing? Interest under 234A. Losses cannot be carried forward. Deduction cannot be claimed. 10A, 10B cannot be claimed. Risk of best judgment. Deemed concealment income if raid is there. Yes. And return cannot be revised. Belated return. You can file it within 1 year from end of the relevant assessment year. And before what? Another is what? Before completion of assessment under 144. Then if AO has given you show cause notice and if he is satisfied with your default, 144 will be dropped and your return will be accepted. Otherwise it will be not a valid return and that will become the base for best judgment assessment. Loss return. Loss return you have to file for your own interests. You should file it within due date. Is it correct? If loss return is not filed in time, PGBP loss, speculation loss, capital loss and maintaining resources losses cannot be carried forward based on provision of section 80. Done. 32. Depreciation, unabsorbed capital expenditure towards scientific research, still they are allowed to be carry forward because they are not covered under chapter 6. Then if you are filing the return within the time limit of 142(1), yes, then what will happen in this case? Return can be revised but losses cannot be carry forward. Yes, fine, done. Revise return. Can I revise the return? Condition is what? Return can be revised provided original return is within the specified time limit. Yes. Within 1 year from end of the relevant assessment year or completion of assessment, whichever is earlier. How many times can I revise the return? 1 time, 2 time, how many time? N number of time. 1 in morning, 1 in afternoon, 1 in evening. Yes. So return can be revised n number of time provided it is within this time and there is some error or omission. Yes, fine. 2 case laws. What it says? Original return, revised return replaces the original return. So in revised return, what you can do? You can carry forward the losses. And what does this says? Belated return is not allowed to revise. It cannot be revised. Got this?